Back. This is TurboCharge Your Business on the #1 global business talk and news network on the internet, IBGR, International Business Growth Radio. I'm Patty Lawrence. This is episode 40, How to Read the Cash Flow Statement. Be sure to go to our website at ibgr.network and download the show notes. So, statement of cash flows. What is that all about? Well, first of all, it is one of the big three financial statements that are important and crucial to running your business. So, what are the three? So, first of all, you've got the balance sheet, which just to review is the cumulative position of your company in one statement. The second is the income statement. And that is what is going on for this period of time, 12 months max, right? You can run it for longer, but it doesn't show too much. And then it gets closed out, right? It gets wiped, the slate gets wiped clean, reset. All of that dumps into your balance sheet, and we restart that process. And then cash flow can be cumulative, and it can also be one period. So you can look at all of that, and it typically follows your income statement periods. So if you're looking at year to date, say July, your statement of cash flows will be through July for the year. You can look at a month, or both. You can look at a cumulative cash flow. Depends what you're looking for. If you're looking for answers on what happened during the month, then you'll probably want to see the statement of cash flows for just the month. If you're looking for what has happened year to date, then obviously you'll be looking at what has happened, your statement of cash flows on a year-to-date basis. So, what else do we need to understand about a cash flow statement? Well, for sure, it is the detail of what happened to cash during whatever specified period of time that you're looking at. Why does that matter? Well, it matters because cash is king. You've heard me say it before. Revenue is vanity. Profit is sanity, but cash is king. That's why the statement of cash flows is being covered here. We need to understand what's going on with cash in our business so that we can make excellent decisions. Not only do we need to know what happened, rearview mirror, right, in the past, but we also need to look at what's going forward. So we would obviously want to be able to project cash as well. And some of that we talked about in some of our another one of our episodes of projections. What do those look like? Budgeting, projections, forecasting, things like that. Cash is a big deal because cash functions as fuel for your business. When you don't have fuel, you're not going to go anywhere. That's a key to your business. That's a key to running your business, running your company, and moving it forward, especially if you're in growth mode. If you're in growth mode, you need to have that fuel so that you can propel your business forward. You can invest in advertising. You can invest in other opportunities. You can invest in fixed assets for your business, more vehicles, whatever it is that you're going to need to make that leap, leaps and bounds. You're growing your business. Whatever that next step is for your business, you're going to need cash to fuel that. So, cash flow statement, gives you the ability to take a peek inside the details of what's going on with cash. Where's your cash coming from? Where's it going? How does it break it down? Sometimes that statement of cash flows is requested by outside users for other things, right? So if you're going to the bank, sometimes the bank will want to see how you're using your cash. So they'll ask for a cash flow statement so that they can see where your cash is positive, where is it negative. Positives are obviously inbound cash. Negatives are outflows of cash. They want to understand sources and uses of cash, right? Especially if you're asking them to fund something. You're asking to borrow money to fund something, maybe some growth in your company, maybe a purchase or an acquisition, whatever that is. They want to understand that because they also want to understand how are they going to get paid back. That's an important question that every bank will want the answer to is, do you have the ability to repay that borrowing over time? Now, some of that is forecasting, obviously. Some of it is historical. They want to understand historically, how have you been doing so that you have positive cash flows coming in order to satisfy those debt covenants, right? That's important to banks. So, in a typical report layout for cash flow statement, the traditional layout is 3 sections: operating activities, investing activities, and financing activities. That's what comprises our cash flow statement. So what's included in each of those? Well, for operating activities, mostly that comes from the P&L, right? That's what our operations are generating for us. So it's revenues minus the cost of goods minus our overhead expenses. So goods and services, whatever we do for our business, whatever we're selling, that is the activity that is getting packaged up there and pulled over into our statement of cash flows. It's basically our operating profit. Okay. Then we have a section called investing activities. What are those? Investing activities include cash flow from the purchasing and selling of assets. Think in terms of physical property, maybe real estate or vehicles, or non-physical property like patents, mm, intellectual property, things like that, that uses free cash and not debt. Okay, so we're not borrowing to purchase those, acquire those. We're using our own cash to do that. And then we've got the third section, which is financing activities. So what do those look like? Well, they detail all of the cash ins and outs from both debt financing, think banks, right? So when we get a loan from the banks for a vehicle or for a building or anything like that, and then equity financing. And that's if we, are floating, issuing equity out there and getting money for it. So we've maybe sold part of our company and we're getting cash in return. So that's what financing activities are. So those are the main 3 areas of our financial statement. And here's the good part. Here's the good news. If you have a software platform, an accounting software platform, say QuickBooks or something similar, the 3 big reports that we're going over are almost always included. I would say 99.5% of the time, they are already native to your accounting platform, and you should be able to just pull it up and hit run and it will populate it. It's nothing that you have to have an accounting degree and go in and sit there and put down on a piece of paper yourself and transcribe from from all of your reports in the system. No. You should be able to pull it up and look at it and then say, here's the period of time that I want to look at, and hit print or print to PDF, whichever you prefer, and then have yourself a report. You can also get them where you're benchmarking them, right? Again, benchmarking shows you how you're performing over time or versus a plan. And remember, we covered this in another segment, but remember, cash flow is not the same as profit. Absolutely not the same as profit. And if you want to understand that, go back to my talk on cash flow versus profit and why they're both different, because they're totally different. They're related, but different. And you have to know the difference between the two because, of course, cash is king. And you need cash as fuel in your business to move it forward. Next week, our theme is performance measures for your business, where we'll cover ratios and operational metrics. Be sure to check out my collection of free resources at turboexecs.com/turbocharge. And you can continue the conversation with me, Patty Lawrence, on LinkedIn. Thank you for tuning in to Turbocharge Your Business and reading financial statements on the IBGR network. I'm Patty Lawrence. See you next time.